Gold and silver prices are extending their exponential rallies, with gold pushing above the 5,100 mark and silver approaching the 110. This rally is supported by the renewed intervention risks by the BOJ, the escalating geopolitical tensions across the Middle East, and the fresh US tariff uncertainty, pulling the US dollar down to fragile support. So with respect to the gold chart, we will be analyzing it using the monthly time frame to be able to frame the overall exponential surge in the price action and the momentum. Now we have the price action currently aligned with the upper bound of a duplicated uptrending channel extending on the chart for approximately 9 years, which is a duplicate of a respected channel between 2016 and 2025 at the 5,110 mark. Now, a clean hold above this level is expected to extend gains all the way towards the 5,220, which is the 400% extension, Fibonacci extension of the overall wave, spanning between the lows of 2018, the highs of 2020, and the lows of 2022. Now, a clean hold above this mark is expected to extend the surge all the way towards the 5,800 to the 6,000 threshold and beyond. Now, given the steepness of the relative strength index indicator at historical highs above the 95 mark, drawdown risks are still valid, and the clean hold below the 5,000 to the 4,900 mark is expected to extend drawdown risk all the way down towards previous monthly highs between December 2025 and October 2025 between the 4,550 mark and the 4,380 mark, which are likely to be aligned with the mid-zone of that respected uptrending channel for potential dip buying opportunities. Now, if you do manage to have a clean hold below this level, you might be expecting another drop towards the psychological 4,000 mark, and the clean hold below that is expected to extend also that drop towards the lower border of that respected channel, towards a previous resistance that spanned across 5 months across 2025, which is near the 3,000 to the 3,500 mark. Now, that would be a very steep drawdown scenario. The likely short-term drawdown risks are still pointed or likely to be near the 4,550 mark. Now, turning towards the silver chart, we will be using the 3-month time frame to be able to frame the overall price action breakout beyond the borders of a 45-year structure on the silver chart, also in line with the steep momentum and price action, where we have the RSI also aligned with historical highs above the 92 mark. Now, silver is currently aligned with the 110 resistance level, where in line with gold, we might have also valid pullback risks on the horizon. And if you do manage to have a clean hold below the 100 mark, or the 90 mark, we might have silver extending all the way down towards the 85 mark for initial potential dip buying opportunities, and the 68 support level potentially to be next. Now, from the upside, we do have potential structural pattern of a cup and the handle pattern extending on the chart for approximately 45 years on the silver chart, and the clean hold above the 110 may extend the pattern potential targets towards the first initial target near the 220 mark, and the next one would be near the 700 mark as the full pattern potential target. Yet that would be more towards the longer time horizon, given silver's importance in the industrial and the tech sector. Careful risk management remains essential as liquidity conditions and headline-driven volatility continue to amplify price swings amid this exponential phase of the rally.